All right. What is going on, future me? Finally, like at last. I tried to record this 3 times, did not go through. My internet went out in between. Like, the devil's working hard today, but unfortunately, I'm working just a little bit harder. So, future me, I hope you're doing I hope you're doing great. I hope you're having a great day, living your best life. And of course, as with every week, want to get into my pre-market plan for the coming week. What I could expect, how I'm looking for setups and everything else. And just to jump straight into it, we are looking at the dollar. We do have a ton of different news catalysts as well for the dollar this week. Just in general, we have JPY, CPI, we have GBP. What is that? GBP PMI as well. USD PMI. All on Tuesday, and then Thursday we have USD GDP, unemployment, USD home sales. Thursday, and then that Friday we have core PCE. So we definitely have a jam-packed week. Ton of different catalysts and drivers that could move price in a very volatile manner. And when we look at the dollar, right, as I mentioned in previous pre-market plans, we were just waiting for the dollar to kind of find a floor, and it looks very definitive at 101 specifically. Especially with the level of momentum we're moving into these zones with, right? Like the most recent daily candle close, huge wick rejection into this previous level of structure, this sort of range mid. And now, of course, the most likely, level in my eyes would be wanting to reach would be 101, 101.20 area. And of course, this just lines up with my thesis on gold longs. So of course, I'm going to want to see dollar weakness to want to take gold longs on the other side of that. And when I look at it on the weekly, it becomes a lot more clear. Just in that, not only did we get this huge momentum candle breaking below 103 and back into that range, we also have an indecision candle, a doji, whatever you want to call it, cracking under 103, sort of like a microstructure retest here as well, back into 103 before it further moved down. So either one of two ways, right? We either get that Morningstar reversal back into like 105 area, grab some liquidity, continue lower, or we already have the retest here with this doji, and we continue moving forward into this very respected level of structure here at 100 and sort of 99 area. Excuse me. And just from that perspective, even on the monthly, right, there's a huge level of structure there, a huge level of liquidity, and it just spells out the most likely floor for the dollars who want to find. And then, of course, again, looking at it from that perspective, we're looking at like 198 sort of level between those two levels that we could potentially land or even potentially break through if we're going to continue to see dollar weakness. But once again, I'm expecting further downside until we tag one of those levels. Whether we get to 101 flat, we get to 100, or we get to 98, those are going to be kind of my areas of interest moving forward. Moving on to JPYBasket, we can start on the daily here. As I've mentioned in previous pre-market plans as well, this sort of level is pivotal, this sort of consolidation range between 84.50 and 8,000. And as we look at this structure developing, right, we do have a upward trending channel here as well. And as you can see, we've seen this sort of structure many times on GJ, on different charts that we're actually trading. And it always, plays out one of two ways. Either one, we get this big squeeze into 84.50, get the break, retest with strength, and continue higher, or we break this sort of this sort of fickle, it's becoming a lot more fickle of a trend line as we continue to squeeze into 8,400 and then break back down into 8,000 and potentially lower than that as far as ranges are concerned. So that's kind of how I'm going to want to be playing it. We are at the mercy of the range. Of course, if we want to continue to see downside on GJ, as I have been calling for shorts, I would want to see the 84.50 break retest. This is a very strong level of structure, though, in that we do have this level of liquidity, and then we also have this weekly and monthly trend line, this sort of crossover, also a weekly range high. So just looking at it from a technical perspective, fundamentals all the way out, I would expect, of course, a knockback from that range high into at least a range mid or lower than that, and that, of course, would line up with 8,000 and the squeeze and break lower. So that's just something I'm going to continue to monitor, as we've seen with the Bank of Japan in their monetary policy statement. They are expecting inflation to gain some steam a bit, be a bit higher in the next coming months and everything else as far as their forecasts are concerned until the end of, I believe, Q3, Q4 of this year, that they'll start sort of pivoting and making sure that they get inflation back down, because they're just printing a ton of money. Monthly as well, nothing super definitive on the monthly. Daily and weekly looking a bit more clear. We do just have a doji sort of indecision candle on a JPY basket. We could be seeing that evening star reversal, but I don't have a crystal ball. The monthly overall just does not look really clear to me. It looks a lot more definitive when we look at this weekly range high tag and potential knockback, and then this big squeeze on the dollar. So moving on into GBP, as we can see, right, I mean, we're getting a very strong reclaim here. Again, I know that I mentioned how, these two charts, JPY and GBP, are remaining decoupled, but we are seeing the pound starting to gain some steam, and that is a cause for concern as well, because I did get burned on 2 GJ trades last week. Just bad positioning. I'll get into it as well. Nothing super crazy, but I definitely feel that the steam that we saw on GBP contributed to that, just in that we didn't see, of course, a clear decoupling or clear strength from the yen, and then just the sort of consolidation that we saw in previous weeks from the pound. So definitely something to watch this week, especially with GBP PMI coming out. And also, just look at this reclaim, right? We're still, some kind of walking on eggshells with regard to this structure, because this is still the 618. This is still sort of a range high point. But we are moving into those levels into those levels with strength. Is this thing on, or okay? Gotcha. We are moving. Oh, excuse me. I just clicked the wrong button. We are moving into that level with strength, and it does kind of add a little bit of confirmation to this thesis, this monthly chart that I've drawn up and have been looking at for the last couple months, last couple weeks, everything else. So when I put it into perspective, right, as long as we continue to see strength in these different levels not intraday levels, but on the weekly and daily time frames, I'll continue to it'll continue to strengthen my conviction in further GBP strength, which of course could turn into a bullish reversal on GJ. So that kind of sums it for the indexes. I hope that made sense. It's really honestly just following along as far as the indexes are concerned. Nothing super crazy happening too much as far as right now is concerned. Just again following along piece by piece, structure by structure, everything else. So let's start with GJ. Looking at it on the daily, right? This has been very tricky, and this kind of the pound strength and the yen strength we're seeing does kind of contribute to this, because as we've seen, right, we're kind of creating a little range in between this 160, 150, 162 area and that 155 area here as well. Just sort of developing a range in between these two levels, waiting to see the break on smaller intraday levels, and I'll get into that shortly. When we look at the weekly, still sort of nothing super definitive. We are sort of finding stability at this range low. Honestly, I'm not going to call it a bullish reversal until we break above 162 sort of area, because there's not a ton of traffic in those levels. So I would have to wait again on intraday levels to be broken to fully call it a reversal back into the June highs and range highs and everything else on the weekly. But overall, I mean, it is respecting this level of structure. Like, I would be wrong to say that this is not a potential reversal, right? It definitely has the makings of that. And when we're looking at on the daily, even more so, right? This is just, again, at the mercy of the range. Either we're bullish above 162 sort of area, or we break back below the 158s and everything else, and the levels in between that on an intraday sort of basis. So when we look at it in the 4 hour here as well, it becomes a ton more clear. Here is 162. Of course, is a bounce or break level, sort of top of the range. As we can see, we have not had any significant breaks above the 162 sort of level, and there's no traffic above that unless we get back into the 164 sort of range. So we can definitely play 162 into 164, and then outside of that, the overall range between 162 and 160 or 159.50 could be played as well. I'll be sitting on my hands in between the 162 and 159.50 range. I'll be wanting to play the break and retest of that August 22 low. So if we get a move along the lines of this, I'll bring up the paintbrush for you. If we get the break, retest, move lower, I would take that all day, every day, and further than that, like as far as lower range breaks and everything else. And then on the other side, honestly, I would consider the 162 break retest into 164. I have said many times in the past that I would want to sit on my hands until we break 164 definitively, but I would at least play it level to level, 162 to 164. Wait to see how it reacts. If we knock back from 164, I would gladly exit that position. But if we break through it with strength, continue to break, retest these different levels, I'll take it thereafter. I know it's pretty crazy that I'm getting potentially bullish if we do break those levels of structure, but I would be stupid not to play all this clear traffic into 164 and higher than that. So I hope that makes sense. Literally just playing those two levels in that range. becomes a ton clearer on lower time frames here as well. We do have a very strong level of structure at 161.50, as I did mention. No clear traffic above that level, and everything that we have seen as far as price action is concerned has been getting knocked back from that 161.50 sort of 162 area. Calls for concern as far as wanting to look for shorts here as well. This most recent close, this overall structure is not looking good for GJ. Of course, we got this long wick rejection into previous weekly candle lows. We have a very fickle trend line here forming as well. So if I continue to see, further weakness below this level, this is something that I would consider playing into 159.44 if it's clean. If it's not clean, again, that we're still in that 4-hour range. I would still want to play the break retest below August 22 lows here at 159.44 and lower than that. I hope that made sense. And of course, 161.50, I could get more near-term buys, but I would want to wait until we're in the 162 area. And as far as setups are concerned, just for this particular play, I would be looking more so for confirmations on the 4-hour, just because it's a bit clearer for me. And then just overall, respecting the levels of structure on the 4-hour, entering on the 1-hour, just to be clear. So that pretty much sums it for GJ. As far as the trades I took were concerned, right? So the first trade I took was on Monday, was it? It was this one right here. So I got faked out pretty hard, right? Like I saw this rounded top sort of coming together. I was a bit early as well. Definitely a couple of things that I could have done better. Let me actually, because it was a 50 pip stop. As we can see, that's where I got stopped out. My target was 2.5 R into these candle lows, this last week candle low here at 155.35. It made sense to me in the moment here as well, because again, you have this rounded bottom. I had a potential head and shoulders here as well, this neckline that I thought was going to be broken, and then this long wick to the upside, right? This long wick rejecting this 156.70 level. So when I saw that wick, I was like, I need to get in now. Like it's a very definitive rejection to that level. But I saw there's so much chop here. I should have just been a bit more patient and waited for this neckline retest. If I did that, I would have avoided this loss, and because I didn't, I paid the price and I got stopped out pretty soon thereafter. Overall, just entered a little bit early. Should have waited for the candle closure and should have waited for the neckline retest, or break and retest. And so that leads me to my next loss. This was I actually closed this a bit earlier. My original stop was up here above these candle highs, but I did see that it was forming a rounded bottom, and I just wanted to get out overall. Initially, I was in profit, right? I took this before I went to bed, and I woke up to it. Did I wake up to it? Was it right here? I don't even remember, honestly. But I had saw this big break, this engulfing candle right here with strength below the candle lows and mids right here, these weekly candle lows, and I wanted to get in on a potential wick creation into those two levels at 158.57 and 158.44. Did not get it. I entered a little bit early here, but I eventually did get that break and retest that I was looking for initially. I just didn't enter like to a T where I wanted to be, and my original take profit was pretty greedy here at 155. That was my last level of TP. The next would be 156.70, and then that first one would be TP1 would be 157.60. And I did get a chance to see this rounded bottom forming. I just got a little bit greedy, and I wanted to stay in the position and just trust in my analysis. And it wasn't until I saw this potential reclaim of these last week candle mids and lows that I was like, yeah, I should probably cut it. It was like 0.4% in the negative. So I was like, let me just cut it instead of being greedy. And it worked out in my favor. Otherwise, I would have lost an entire percentage point. Honestly, I think this was good execution. I could have waited a little bit longer, gotten a better entry at 158.60. But overall, I should have managed it a bit better in that I should have not gotten greedy when I can clearly see that looking left that this is a level of structure here. But that pretty much sums it. Hope that made sense. Again, if I see clear weakness below 160.57, I'll take that into the August 22 low and lower than that. Otherwise, I do not want to play this range, and I will only take the break and retest below the August 22 low or the break and retest above the 162s and get into buys thereafter if they present themselves. As far as gold is concerned, gold is at a very pivotal point on the chart here as well. I did say that I wanted to get in on break and retest with strength on the daily here. And that's exactly what we're seeing, right? We have this big break, retest, and now we have a big engulfing. And now I was a little bit late to the party, so now I'm going to want to get in on stuff this week. But also something to consider is this weekly candle here as well, playing right into this level of structure here, this trend line, also level of liquidity, also that 618 there as well. So definitely have something to be concerned about as far as wanting to respect that level and make sure that we break through it definitively, or if we get knocked back, not getting caught up in like, not get caught up in trying to catch longs when we're really starting to reverse. And that becomes a bit more clear here on the 4 hour here as well. We have a potential bull flag as well as a broadening descending wedge. So typically when we get breaks and retests of this, it could be like middle of the wedge here in confluence with the 618, or it could be above like those candle highs. So that's kind of what I'm looking for. Perfect world, I would get in on 1910 and higher than that, the break and recess of 1910, and long it from there. I would still consider 1884, but would put more weight on 1865 overall. On the 1 hour, becomes a ton clearer here as well. We are at the mercy of the range between 1921 and 1937. I would take range low 1921 buys into that range high at 1937 and higher than that all day, as this tool mentions. We also have a potential bull flag here. I actually saw this candle formation here at 1908. Pussied out just a little bit. I also would have had a really good entry. But the bull flag does look good if we don't break this descending triangle below these last week candle highs. If we do see that, I'll sit on my hands for a bit, get into 1894 buys. I would also consider 1908. Again, just playing a level to level on each of these levels. I'd also take 1881. I'd also take 1866. So I hope that makes sense. Pretty simple and straightforward this week. I'm actually cutting it close. It's 4:58 for me here Eastern. So the market is about to open, but I hope that makes sense. Pretty straightforward as with every week. Future me, I hope you're killing it, bro. I love you. God bless you. Continue to do your thing. Live to your utmost potential. Live your best life. And God bless everybody watching. Take care.